How's it going, investors? I'm Ari, and welcome to my channel, which since hitting my goal of $100,000 with my personal brokerage account, I've just decided to keep pumping videos out there for all of you so you can remain on track to hitting your very own personal financial goals by way of either value or dividend investing. Now in today's video, I want to keep it very simple and just sharing with you a macro market overview given all the recent uncertainty before breaking down two new positions that I was able to build up thanks to all the market fear bringing some of these stocks to some very attractive lows. Now just before we dive in, do me a massive favor here. Go ahead, tap on that thumbs up button, as it certainly helps me out in growing this channel and getting the word out there. And if you personally haven't already subscribed, you know what to do in joining me on this journey, because I would certainly love to have each and every one of you on for the ride with me. Now YouTube, let's go ahead and dive right in. So first thing first, our market overview, because
holy mother of this is insanely
beautiful for opportunities galore. We got to talk about what exactly has been going on in the stock market. Not long ago, we were flying high before the Consumer Price Index report came out and gave us a gut check, followed by the Federal Reserve, then following up with the 75 basis point rate hike. And then more recently, there's just been more and more fear building up that the Federal Reserve's aggression is not necessarily going to be cooling down anytime soon, meaning investors are growing ever more fearful of a detrimental recession. Now, at the end of the day, it's pure fear that's driving the market and making for opportunities for investors who are honestly just long on their investments. So investors like you and I. Now, this is all leading me to beautiful stock opportunities I've been able to jump into and build up positions with because of all of this fear. So with that said, the very first stock I've been loading up on is Stanley Black & Decker, ticker symbol SWK, which is not only the largest tool manufacturer in America with 50 manufacturing facilities around the country, but it's also claiming that very title on a global scale as well, with over 100 manufacturing facilities around the world. So it's safe to say that Stanley Black & Decker has certainly come a long way in terms of growth, and not to mention it has seen its fair share of market volatility since its founding back in 1843. And here we are today with this company still dominating the industry with a market capitalization at $11.67 billion. However, that doesn't mean it's immune to market swings, especially when the market conditions are as they are today, with high inflation and consumer demand dropping, especially with home improvement and power tool markets, which is exactly why we see Stanley Black & Decker steadily declining for some time now, coming down from roughly $182 per share at the onset of the year to now trading for $78 per share today. That's a whopping 56% discount, with the PE ratio coming in at just 12.9, presenting the opportunity in and of itself. But let's talk for a moment about Stanley Black & Decker and what exactly it brings to the table for investors. Of course, first and foremost, that we're talking about top shelf trusted brands from DeWalt to Craftsman, Paladin, among multiple other reputable brands that are all unlikely to disappear from the market anytime soon. Secondly, Stanley Black & Decker had actually been in the midst of a decade-long divestment process from its industrial and security segments, therefore placing more of a focus on advancing their best products in their consumer tool and housing segments, which now is bringing in roughly 80% worth of the company's revenue. Now, in understanding where most of the revenue stems from when it comes to Stanley Black & Decker, and knowing that the housing market is battered as it is, but with time will most likely actually just recover, I only see opportunity and give the company a pass on the weaker than expected earnings reports that they've shared within the past quarters. Now, interestingly, while hedge funds are not exactly buying in, insiders of Stanley Black & Decker are, and that should definitely build some confidence for us as the outsiders per se. So I joined them as I built up a position with Stanley Black & Decker, scoring 20 shares over the past couple of weeks here, with the various buy-in prices ranging anywhere from $97 per share down to $79 per share. And while I certainly am going to be waiting the market's recovery with Stanley Black & Decker, it's probably going to pass that target share price coming in at $107.50 per share. But if it doesn't, that's still 30% worth of upside. Of course, as a long-term dividend investor, I'm also just pretty content with the investment because I'm going to be collecting on Stanley Black & Decker's 4% dividend yield. Now, as for this next position, it actually may come as a surprise to many of you, given it is strictly a growth stock. Therefore, it does not pay any dividends at all. I know, don't get all rowdy here. I'm gonna confess now that I'm actually prepared to buy even more shares of this company should it continue to drop in share price. It is that good. So what stock am I talking about? I'm talking about the one, the only Google, well actually the parent company of Google here, Alphabet, ticker symbol GOOGL. Of course, it doesn't need much of an introduction, so I'm simply gonna share my thought process on why I actually decided to move forward in investing into it, among a few other noteworthy findings, before sharing how much of a mega cap tech leader I now own. So first and foremost, let's break down what's been going on with Google, because it's down on the year by 31%, trading for under $100 per share with a PE ratio coming in at just 18.4, which creates, at least in my opinion, a tremendous opportunity for investors. Now at this point in time, I think Google's share price decline is a direct result really of two factors factoring in at the same time. First of which is just the fact that many stocks saw massive run-ups during 2020 and throughout 2021, and they needed to just simply correct themselves. Now, Google is one such of those stocks, so it began an initial descent, but on top of that, with all of the economic conditions now factoring in, Google, among all these businesses, are hit on all fronts. Now, Google is also just not immune to market volatility, nor recessionary conditions, just because, well, it's Google. So especially now that Google generates a vast majority, if not almost all of its revenue from actually targeted advertising, and with a recession, advertising sales are likely to just continue to decline further as businesses tend to reallocate their advertising funds elsewhere within their budgets. However, there will eventually be an economic turnaround, mark my words on that one, and when that comes, we're gonna see advertising for a lot of these companies flare right back up. Google's gonna be first in line, and of course, we're gonna see a future with targeted advertising becoming ever more necessary and plenty more money to come Google's way. Now, I don't stand alone when it comes to this level of optimism. We can see a ton of hedge funds actually pouring millions of dollars into Google as well. I mean, just take a look at some of these hedge funds like Bishop Rock Capital investing over $500 million to the Saudi royal family here, building up a position as well. And if smart money is investing into a company like Google, I mean, it's usually just a very clear and positive indicator for smaller scale investors like myself and perhaps you as well. Now, analysts are also forecasting quite a bit of growth, about 46% worth of upside, coming in at a target share price of $144.88 per share, which has led to my confidence in investing into Google, buying 28 total shares at this point in time, with a buy-in price ranging from $98 per share up until around $108 per share. Now, last but certainly not least, I've just been buying more shares worth of essentially the entire stock market by scoring shares worth of Vanguard's Total Stock Market Index Fund, ticker symbol VTI, which just allows an investor, in my opinion, to cover all of their bases in terms of the stock market, investing into over 4,000 companies ranging from small to mid and large caps, with a balanced mixture of both growth and value investments. As for now, I hold 65 total shares worth of VTI, and I'm simply just going to continue to dollar cost average my way into the fund until retirement. So there you have it, my two new positions, from Stanley Black & Decker to Google, to continuing to dollar cost average my way into Vanguard's Total Stock Market Index Fund. Those are the investment moves I've been making. Now, I would certainly love to know what moves you've been making during the course of the last month or so, whether you've been buying stocks, selling stocks, or anything in between. Drop all those comments down below. Now, please keep in mind that I am not a financial advisor, so just after my videos, if you want to make the similar investment moves, always do your own due diligence. And of course, just before we get going, tap on that thumbs up button, help me grow this channel. If you haven't already done so, subscribe. I'd certainly love you to be on this journey with me. Now, until the next video, investors, I will see you all there.